charts and technical analysis now brings you into the magical realm of price prediction. Theoretically, securities can only go higher or lower, encouraging a long side trade or a short sale. In reality, prices can do many other things, including chopping sideways for weeks at a time or whipsawing violently in both directions, shaking out. Buyers and sellers. The time horizon becomes extremely important at this juncture. Financial markets grind out trends and trading ranges with fractal properties that generate independent price movements at short-term, intermediate-term, and long-term intervals. This means a security or index can carve out a long-term uptrend, intermediate downtrend, and a short-term trading range, all at the same time. Rather than complicate prediction, most trading opportunities will unfold through interactions between these time intervals. Buying the dip offers a classic example, with traders jumping into a strong uptrend when it sells off in a smaller time period. The best way to examine this three-dimensional playing field is to look at each security in 3 time frames, starting with 60-minute, daily, and weekly charts. It's now time to get your feet wet without giving up your trading stake. Paper trading, or virtual trading, offers a perfect solution, allowing the neophyte to follow real-time market actions, making buying and selling decisions that form the outline of a theoretical performance record. It usually involves the use of a stock market simulator that has the look and feel of an actual stock exchange's performance. Make lots of trades, using different holding periods and strategies, and then analyze the results for obvious flaws. Investopedia has a free stock market game, and many brokers let clients engage in paper trading with their real money entry systems, too. This has the added benefit of teaching the software so you don't hit the wrong buttons when you are playing with family funds. So, when do you make the switch and start trading with real money? There's no perfect answer because simulated trading carries a flaw that's likely to show up whenever you start to trade for real, even if your paper results look perfect. Traders need to coexist peacefully with the twin emotions of greed and fear. Paper trading doesn't engage these emotions, which can only be experienced through actual profit and loss. In fact, this psychological aspect forces more first-year players out of the game than bad decision-making. Your baby steps forward as a new trader need to recognize this challenge and address remaining issues with money and self-worth. Though experience is a fine teacher, don't forget about additional education as you proceed on your trading career. Whether online or in person, classes can be beneficial, and you can find them at levels ranging from novice with advice on how to analyze the aforementioned analytic charts, for example, to pro. More specialized seminars, often conducted by a professional trader, can provide valuable insight into the overall market and specific investment strategies. Most focus on a specific type of asset, a particular aspect of the market, or a trading technique. Some may be academic, while others are more like workshops in which you actively take positions, test out entry and exit strategies, and engage in other exercises, often with a simulator. Paying for research and analysis can be both educational and useful. Some investors may find watching or observing market professionals to be more beneficial than trying to apply newly learned lessons themselves. There are a slew of paid subscription sites available across the web, Two well-respected services include Investors.com and Morningstar. It's also useful to get yourself a mentor, a hands-on coach to guide you, critique your technique, and offer advice. If you don't know one, you can buy one. Many online trading schools offer mentoring as part of their continuing ed programs. When up and running with real money, you need to address